Hello everyone, it's Monday, May 12th, 2014. I hope everyone had a good weekend and a good trading week last week. Last week, we saw pretty volatile price action at the end of the week, especially in the Euro USD currency pair. This is a chart of the Euro versus the US dollar, daily chart of the Euro US dollar. And what happened last week was that the market traded up and tested this 140 resistance area here and reversed pretty significantly. And the market fell from a high of just shy of 140 down to 137.50 or so. So over 250 pips in 2 days, the market fell. Now, the question is, why did the market find resistance at this all-important area? For a clue, we could look at the US dollar index. This is a chart, daily chart of the US dollar index. And what we can see is that last week the market tested the 79 support point. This US dollar cash index actually. So last week the market tested the 79 support point. Now, why is the 79 support point significant? We see that the market found support here at 79, 79, 79, 79. That's 1, 2, 3, 4, 5, 6 times, and the market traded down to 79 again for the 7th time. So clearly this area of support is significant with the US dollar index. And as you know, the euro makes up about 58% of the US dollar index. And that's why we had such a pretty significant reversal, because the dollar index traded down to all-time support. Now, for clues as to what is going to happen next, you can interpret this as a double bottom. That's one way to interpret it, and a double bottom would be confirmed if the market trades above 81.50 for the US dollar cash index. Or you could see that the market is once again, and this has been a theme all year, entering another triangle. So the market could be entering another triangle, and what may happen is that the market could trade up somewhere to this trend line and then attempt to break the 79 area again. So that's what's happening in the market on the US dollar index. And I can see that if the market does close below 79 on a weekly time frame, so a weekly bar closes below 79, then we could have a pretty significant decline in the US dollar. A lot of times when it comes to trading, you have to prepare yourself for what is about to happen. And the analysis so far looks like this 79 level will eventually give way, and we will see a decline in the US dollar index. So what does that mean for the euro currency? That would mean a rising euro. So we can redraw our trend line here with the euro. So the market is entering a triangle. And we're looking for the market to test support near this 137.20 level. As long as the market stays above 137, this triangle will be valid, and the uptrend will still be valid. So if the market stays above 137, what we will see is, or could see, is the market head back up and try and take out this 140 level again. If the market trades below 137, it will have to then break the 135 level, and that will signal to me that this market has reversed and a new downtrend will start. Again, when you're trading, it doesn't matter which direction the market really ultimately goes. Our goal is to make money from the direction of the market. So either way, I believe that we are in for some really exciting times and some really trending markets with the Forex. Taking a look at the British pound, we saw that the market broke out of its triangle consolidation and is now finding support. Remember, previous resistance, this black line was resistance, now turned support. So the market is testing this area of support. So again, the British pound continues to remain very positive, and the euro continues to remain positive. And what you have to do is prepare yourself from now. I'm anticipating a pretty significant rise in the euro currency in the months to come. Probably up to 145, even maybe up to 150. So that will be a pretty significant move in the euro currency and in the Forex market in general. Taking a look at the Japanese yen, this market broke below this uptrend line and is now looking to close again above the uptrend line. We have to keep an eye on this because this also is a triangular consolidation, and this market could break to the upside or the downside. At this point in time, it's a 50-50. It's a 50-50 chance the market will break either way. My main focus for profit, because that's the whole point of us trading. My main two focus areas are the British pound and the euro, where I could see about a 1,500 to 2,000 pip move on each of these currencies. So that's what I'll be focusing on in the weeks to come. And just to reiterate, from January or so, I've been predicting that the markets will continue to rise, and what we have seen is a steady increase since January when the euro was in an uptrend and is still in an uptrend, and also the British pound, especially since January, February, has gone up over 400, 500 pips. So again, thank you very much for listening. If you would like some more information on how to join our program, click the link below to get signed up with the Forex income system. Thank you very much.